Deed Awareness Week, day 3. Now, last 2 days have been quite, I'd say, technical, deep dive. You've got some classic, what I say, vintage Grant Abbott, Grange, Hermitage, I don't know which year, but absolutely vintage.
Better than RWT, mate. So there you go.
Vintage is cutting edge at the same time as what you get with Grant. We're going to open this up today, really hit the practicality point of view. Tomorrow, I've just got off the phone from Damien Greer and also Dave Stimson, 2 of the best legal minds in Brisbane for family law, in fact, around Australia, family law, insolvency law. You are in for a treat tomorrow. Damien and David, along with Grant and myself, are so excited. We're going to be presenting tomorrow the best attack and defense on structures, and we're going to help you to get as bulletproof as you can. In fact, talking with Damien, Dave, I'm going to do it again. I'm going to let the cat out of the bag. We're going to do an event later on this year, and we're going to get Grant live, myself, David, Damien, and David Stimson. We're going to do a full day deep dive on family law and accounting, insolvency and accounting. And there's something else you're going to do in July, Dave, and I'm not going to talk about that, but we are so excited about what we can bring to help all of you just to have some all-round knowledge as far as what to do. Tomorrow, you're in for an absolute trip. So excited. But today will be epic. Let's get into it. Why Deed Awareness Week? Deeds and constitutions are the foundation for business and investment structures. So asset protection, which accountants do all the time, needs to include estate planning. And estate planning is getting control points right. Tomorrow, you'll hear control points emphasised in a big way by the lawyers. But today, we've got the Sultan of SMSF, the guru of estate planning, Grant Abbott here, good friend of mine. Grant, thank you for joining us again. We're going to look at some key control points. Now, let's just move on to our first slide. We're going to look today, roles of the appointor and the trustee. What are the roles? What happens on death, bankruptcy, or incapacity of each? How can you change them? How can you guarantee a line of succession? We'll look at the differences between distributions for trust income and income for tax purposes. And a bonus, we're going to go through trust distribution resolutions and how to get them all signed before 30th of June. Straight in it. Grant Abbott, thank you for joining us again today.
Okay,
now, discretionary trusts. We talk about blood and honor. I'm going to talk about me and talk about you. And accountants on board today, please think about you and your families. Yes, you can think about your clients, but please apply this to your situation. You've all got companies and investment trusts and everything else like that. Think about your situation. In trusts, discretionary trusts, we have an appointer. Grant, who is the appointer and why is this so important?
When we have a look at down, it's in fact, if you look at it from a long-term perspective, it's not so much anymore, but for many years in the old halcyon days of tax, you'd have what we call blind trusts, and they might be set up in Hong Kong or one of the other tax jurisdictions. So essentially, you'd have the trustee, you'd have the beneficiaries, and then from there you would have the person who really controls the whole trust, that appointor. And essentially that has carried through to modern discretionary trust laws, so that the appointor, depending on the deed, and some of the older deeds they call them guardians, sometimes you'll see principal, but essentially for most of us been through the mill, we understand that the appointor essentially is the common parlance for trustees. And essentially, when we have a look at it, the question I like to ask and probably put to all of your clients, and also if you put it to the clients and also to the advisors on this call, is, essentially, would you invest in a company that did not have a CEO for a year? It was in the courts trying to sort out who should be the next CEO. And we looked at that yesterday, and we looked at it on Monday, is that if we've got a sole director company and essentially they're also the appointor, what happens if they die? What happens if they become incapacitated or they're locked in quarantine up in India and not able to sign any documents, which we'll look at what you can and cannot do electronically a little bit later on. But essentially that failure in succession in a company would be absolute disaster. And certainly, if you saw that in the listed public company market, if that was going on, that market would tank. The whole business would actually drop, and certainly share price. And the same thing is for many of our clients. And I think this is an issue there for our clients to understand why they've gone into a family trust. Now, for many of you, it'd be worthwhile you asking them why they've got into a family trust or discretionary trust. Many of you probably have said, well, essentially that you've talked to them about asset protection, tax minimisation, tax streaming, all of that sort of stuff. I think that's crucial, but it's worthwhile going back to your clients just to look at when you're doing your annual review, just have a look at a structure and just say, well, we've set you up in the discretionary trust. And importantly from that one is because we need to get a playing field on it, so that ask them, what's your understanding of why we've set you up in that discretionary trust? I mean, when you talk to people, Tim, around discretionary trusts, and if I asked any of your clients, what would essentially they come back and say why they've set their trust up for?
Number one, they would say asset protection, if it's done in a way to segregate risk from assets. Number two would be massive tax flexibility. That's what clients would think, those two things. But then, because I've been working with you recently, not recently, over a long period of time, but changing this recently, estate planning, proper succession.
Yeah, look, I think so. And I believe that there's three styles that you can really put in place for a client. So the first one is for the tax streaming, reduction, minimisation, really, when you get down to the end of it.
Spreading income between family members. That's what I say. Trust related spread.
And
bucket you and I are massive fans of bucket companies. In fact, we're going to do an accounting with Dave and Tim and Grant in July about bucket companies and why they're so good.
But importantly, don't have those bucket company shares hanging out to dry by being in the name of one of your clients. The value of those should be put into an asset protection mechanism, such as a family protection trust. And I think that's.
And I'm going to rag on you for a minute. You've got a light on. Have you got one of those round lights on your face?
No, I know it's terrible, isn't it? So
no, it's just like, I think that you're really going hard on the appearance. I'm feeling kind of a bit dark here at the moment, but I think you're doing anyway. That's a side.
Well, let the light shine on me,
mate. It is okay.
So going back to that, so I think that tax level is really crucial for your clients, and we've explained that to them. The second level up is, with a discretionary trust, you want asset protection with that. And remember, we discussed it the other day that in terms of asset protection, again, for many of us, we've put obviously if you've got individual trustees, forget about the asset protection, it's all gone. If you've got there again, you've got a corporate trustee, but the shares are being held by one of the risk takers, so to speak, which traditionally slips by, then that's where the litigators will actually attack you. And I would do exactly the same thing. If I could latch onto that, what I'm going to do is stretch it out, because at the end of the day, the law, for those of you very exasperated with the law takes time, because you have to get to a negotiating position somewhere down the track. So essentially we can have the asset protection. The next level above that, which is where we're going to, and I would implore, and for many of you who have been following both Tim and I, is that we want to actually build a bloodline, a family wealth protection vehicle. So that encompasses tax minimisation, asset protection, but not just high level, but going down, many, many levels down the track. So the kids or grandchildren who are also bloodline are also protected at that point in time. So that when you're dealing and you're going back to talking to your clients, it's a good time to, look at upgrading the system. So find out where they're at, talk about, if you're just looking at asset protection, ensure that you have that, obviously the successor director. But I want to talk to you a little bit further around the leading member discretionary trust and how that builds that bloodline family wealth protection, which again enables you. Remember, we've gone through that upgrade, and I know we're going through it very extensively on Friday. In fact, I'll show you how to upgrade really easily to that leading member discretionary trust.
Brilliant.
Now, importantly from that is that going back to that CEO, if you don't have a line of succession, you're never going to invest in that company. It's the same.
So in my situation, I've spent the last couple of days in my trust. So I've upgraded everything. I'm the leading member. If I die, my wife Lyndall's in there. If she dies, my daughter Savannah's in there. I know you'll go through this in a minute. If we're all in a car crash and we die, which I probably never happens, then it's going to be a combination of my mum and my wife Lyndall's father and the kids either side. So we need to think of that end beneficiary if they're not all there, but otherwise it stays in the bloodline. And the way we've done it, if Savannah is in a relationship in the future, it goes bad, it's going to be protected. And we'll focus on that with Damien Greer, family lawyer, tomorrow as well. So Grant, we need a succession plan, that line that's there. So take us through how this happens.
So importantly from that, if you have a look at it, just over the next page, I think I've got typical one. So if you just turn to slide. So here's a typical one. You can see in the definition of appointor. So if you're setting up a like your doc's discretionary trust, the key person, as we've said, the king or the queen, in fact, probably it's more akin actually to the president of the trust, the person who can appoint or remove the trustee, can appoint or remove beneficiaries, can vary the deed. The whole thing is the appointor. So the appointor is that faceless person, so to speak, who really does control the trust. And this is why it's absolutely crucial, because that's the area of law that we're going to be talking about tomorrow with our insolvency practitioner and also a family lawyer. Because if we look at it and we have a look here where I've got appointor means John Smith, so that's fine. And in Tim's got, Tim Munro is the appointor. But the problem is if someone comes for Tim, then Tim is the controller. So that essentially puts all of the assets of that trust potentially under attack. Definitely if it comes around to a family law perspective, probably to a lesser extent for a trustee in bankruptcy, and certainly to a lesser extent for family provisions. But again, we want to shield that so that if someone comes in and Tim says to me, look, Grant, I'm worried here, someone's going to make a claim, then what we do is Tim just simply resigns. And then you can see who's the next one coming in. In this instance, in John's case, it's going to be Sally. So John dies, Sally comes in next. But Sally might also be under attack because it might be an issue that it's both husband and wife are both under attack. So therefore, Sally says, not interested. I don't want to take up the appointment. So then it goes down to the next one, which is Lily Jones, which is John's younger sister. So she's a solicitor, so she's in there. Now, if Lily drops off, then we've got the next in line, which is Max Smith, which is John's child. So we've got a really good intergenerational line of succession. But can you see there, the importance of it is being able to drop in and out of that appointor role. Yeah. So because essentially, and that's the crucial, is to make sure that the person who comes in and takes control of the appointor, the controller or the new president, is very close to you, obviously.
Now, Grant, with this, what I've seen in many trustees when we take over new clients, there's one appointor and there's just no successor. I know. And I'd suggest to every account listening today, check your trustee, check all your clients. It just swings in the breeze. And our clients are so hardcore to us about reducing tax, protecting their assets. Yeah, the biggest work that we need to do is really think about, if you're incapacitated, if you're not here, all your hard work can blow up in smoke if your money doesn't go, your wealth doesn't go to the key people in your family that you want it to. So this is the first thing we need to upgrade. We need to help them to understand you need that line of succession. So everyone today, what's your line of succession?
Yeah, so Veronica was just asking a good question. Is this in a separate document or is it in the deed? It's in the deed, which is really important.
In the deed.
Now, if you're upgrading to one of our deeds, then you'll go through this process of the appointor. If you want to keep your existing deed, then we've got on the Light Year Docs a deed of succession of appointors, so you can add extra appointors at that stage. If you want to resign or remove or change the whole process, again, we've got a deed of change of positions, which is important. And I'm going to be talking about the leading member one a little bit later on. But essentially, the succession is the key to everything. And here's a bit of news for you. If you get that succession right, so for example, we've got, in this instance, John, then Sally, then what would happen there is that when we look across everything, it makes things a lot easier. So, for example, if we've
Straight
got
line, isn't it? Straight line
John,
across.
Sally, Lily, and Max, then when I'm drafting up the will and I'm looking at the executors, guess who the executors are for John? It's going to be Sally, then Lily, then Max. Now, if I'm doing an enduring power of attorney for John, it's going to be Sally, Lily, and Max. And it's the same thing, is that when we start to look through this process, you can see how the control goes across a lot of structures. But
Frank,
again,
can I just say at this point, accountants, this is where you come into play, because your clients talk to you about their family situation.
Yep.
They find it difficult to talk to a lawyer they've never met or haven't had recent dealings with about this sort of stuff. But you know the ins and outs of the family. So it's all about you talking to them and helping them to understand this. And again, Change CPS, we've got documents to help you do that. Grant does webinars every week, once or twice a week on Light Year Docs. I go to every one of Grant's webinars on Wednesdays and Thursdays. That's my CPD. So I recommend, and we'll get emails out to everyone so you can join them. Jump on. If you find that you need confidence in this stuff, Accounting with Dave and Tim, we have Grant, we have other lawyers on board all the time. Grant does 2 webinars a week. Just invest in yourself with this CPD and you'll get your confidence. Sorry, Grant.
We'll be talking a little bit later on the SPEPA course, which is crucial. With this one, I've actually got a bit of a gift for everyone as well, because we might talk about, because Friday we're talking about doing upgrades, aren't we? Okay, so when we come around to that, what I've done is I've done an email swipe on the 5 reasons why a discretionary trust needs to be upgraded. I'll give that to you as well, Tim, so you can.
If you email that today, I'll put a VPP on it and we'll get that ready for Friday.
Okay, I'll send that to you. So that will go through, and that again, that's collateral for you to go to your client, and it does 2 different elements. First off is to say, look, things change. If you're still running with a BlackBerry phone in the modern day and age, well, then you're an absolute laggard. And it's the same thing. If you've got a discretionary trust that really is a couple of years old, it is really moving into, believe it, an old time zone. And it's like having a Samsung S6 than a 21.
Look, on that, accountants, again, this is what I hear from some accountants. They feel too scared to go to their clients and say, you need to upgrade the deed, because they think the client's going to say, I've already paid for it. What are you trying to sell me? And the thing is, in every industry, things are changing all the time. You get monthly updates on your iPhone. Are we all running 14.6 on your iPhone, which takes away your battery life at the moment until they run 14.6.1? Xero and Maya, they do monthly updates on their software to tweak things. Every single industry is updating all the time. Don't get lulled into the false into the false reasoning that, oh my goodness, I don't want to tell my client they need to spend money to upgrade it because I think I'm trying to sell them something. That's dumb. What you need to understand is there are new, better ways of doing things. And if you can prove the value of that to the client by the email we'll give you on Friday, you should be charging for that. Your client's getting a benefit from that. Now, if you can't explain the benefit, and if there is no benefit, you shouldn't charge. But if there's a benefit, your client should pay, and we're going to help you.
Absolutely. And also should be mindful that if you do, there's twofold from a legal perspective. First off, you're in the face and you're telling them the reasons why they should upgrade. The second side should be that, look, if you choose not to upgrade, don't come back to us.
Yes.
Like in that Mercanti and Mercanti side deed we saw the other day, where the legal firm stuffed up the variation, that costs the client a lot of money. So when we come through, we'll go through the upgrade process. But again, we want to make it easy for you. Tim will have that email swipe for you to send out to your clients. But also, in fact, I'd encourage you, Tim, because I know you love that indemnity side, is to just put in there maybe a sentence or two. Well, if you don't go through this, you ever get caught, then effectively it's up to you, because that will cover you from a PI perspective. Now,
yeah, because again, accountants, clients change their minds and stuff. Something happens in their life and they turn on you and then they lie and they will blame you. In Australia, unfortunately, we live in a blame, society. No one wants to take personal responsibility and they like blaming everyone else. So if you haven't recommended these things to your clients and then they find out they should have had it, or if you recommend it and they don't want it, we'll give you a document where you email them back and say, we confirm you've said you don't want this. Because you know what's going to happen? If you don't get this stuff right, someone in your client's family, after your client's dead or something goes on, will talk to a no-win, no-fee solicitor, and they'll amp up and they'll have a crack at your PI. And
Absolutely.
if there's one thing I want to leave, well, there's a few things I want to leave. I don't want to die, but if I do take my last breath, I want to know that I've helped the industry to get the respect that it should have from everyone, and that we make certain that no one can blame you for something that you tried to help a client with and they rejected. That really annoys me. So that's something, accountants, I'm here to help you with that.
So, which leads us on to the next one. So, with our stocks, I shouldn't say stock standard, still got, as you can see, lots of bells and whistles in there, and you'll see that when we come around to the distributions, because I want to talk to you about where we're going. But we've also got, I built at the same time this concept of being a leading member discretionary trust. And again, it takes, when you're explaining it to the client, you can explain it very akin to the British royal family, is that, again, everyone understands that line of succession. So it's a good way, because unfortunately, when you're dealing with clients, they don't get it. But I find that when you're talking about that, clients get it instantly. We know the Queen, then there's Charles, then there's Wills, then there's George, and carries on down the track.
Where's Megan?
Yeah, well, she's out, but
Yeah.
what's the new one is in a line of succession? So is that Lily or whatever it's called, the new one? But that's a very long way off. But when we have a look at that, so the leading member, I just want to go through why it's different from a discretionary trust. So first off, we've got the leading member appointor. So that's A-OK. So again, exactly the same as the other appointor, all flows down. Now, one of the again, we need to create that leading member appointor in exactly the same way. Try and build down 2 or 3 generations. You can go in ours, you can actually have, I think it's about 6 or 7 lines of successive appointors, which might be a bit over the top, but again, it just shows to your client that you are building something for them that is either going to go for 80 years, or if you choose jurisdiction South Australia, it's going to go into perpetuity. You're a long-range thinker, and I think that that's absolutely crucial for them. We'll just go to the next slide there, Tim.
Sure. Here we go.
So the next one is this is where the deed starts to get different, because many of you, if you've read your deed, you'll see that there's the appointor or the trustee. The trustee obviously has the powers, to invest, powers to do this, powers to do that, enter into contracts. But again, they're all subject generally to the appointor. The next level is who's the beneficiary. So quite often in your discretionary trust, you'll see the principal beneficiary, then includes their spouse, includes their children, grandchildren, and a whole range of other people, and anyone the trustee wants. With the leading member, so we've still got that sort of flexibility in the standard discretionary trust, but the leading member trust actually focuses on the leading member. So we have that original leading member there, and essentially they're the first principal beneficiary, so to speak. So we don't have principal beneficiary. What we've got is the beneficiary is the leading member appointor. Then it includes their bloodline children, and also their grandchildren who are bloodline, and their great-grandchildren who are bloodline. So, and also entities that are connected with them, for example, self-managed super funds, other trusts, other companies, etc., such as a bucket company. Now, outside of that, effectively, there is no one else that can get in. There is the option of bringing the spouse in when you set one of these up or you're upgrading to one of these. But because the spouse is not bloodline, effectively they're out of the game. So when you're dealing with your clients, you can bring them in and then that starts to go down the track. But again, if this is a spouse with a second marriage with stepchildren, if you bring them in with their, compared to, for example, a discretionary trust, if you bring them in as principal beneficiary, then likewise their children are going to be included. Here, if you bring them in, their stepchildren or anyone else is not going to be included. The same way, if your great-grandchildren who are still part of this trust going down the track, because we're in South Australia, the rule against perpetuity doesn't apply, their spouses, the spouse's children, if they're not bloodline, they can never be a beneficiary of here. And I think that that is absolutely crucial. Likewise, so not DNS relatives, it should be DNA relatives are also included in that big.
I was wondering what DNS was, but
I know,
yeah,
DNS,
well,
that's key. I think I was working on the site this morning doing a DNS, but anyway.
yeah. Okay. And what about the trustee? Because we've got, and we'll talk on Friday, one of the things we're talking about, if you've got an existing discretionary trust, you can upgrade that simply and easily. We'll show you on Friday using Light Year Docs. We'll show you in 5 minutes the process, what the deed looks like. But it's not just the discretionary trust deed, it's also the constitution of the trustee company.
Yeah. So I think that's crucial. So a couple of points there which are really important. So going back, we're going to show you on Friday how to upgrade. And remember, going back to the Commissioner's guidelines and both Clark and commercial nominees cases, we have to make sure it's in accordance with the underlying amendment or variation clause of the discretionary trust. We had a look at a couple yesterday. We saw the one from Light Year Docs, which is pretty easy to do. Just need the trustee and the appointor to sign off. But then we had a look at another one, which was from that McCanty and McCanty case. And that was quite detailed, and obviously the legal firm even stuffed up in that instance. So in that don't feel frightened if you've got a case where you're not 100% comfortable about. That's where Abbott-Family will come in and we can upgrade it for you. And then it just simply it's through our process. So the client's just going to be charged a fee there. But again, it gives you all that opportunity of making a bloodline. Now, the problem about it is we talked about the beauty of the successor director. Remember, we had all those dramas that were going on yesterday. Remember how we said you could set up a self-managed super fund with one trustee or one director of a corporate trustee, but 4 or even 6 members when that comes through. So things that you didn't think of before are now, right in the firing line. Now, with the successor director solution, it's fantastic. If you become sick or you resign, or alternatively you die, then that successor director is there to give you that continuity, which is fantastic. But again, I've learned the hard way is again just having a stock standard ordinary company, limited by shares as a trustee company is weak, because again, those shares are being hung out to dry. We saw yesterday, you can't have those shares inside a trustee company because it just doesn't work in timing. So if those shares are in an individual's name, again, if I'm litigating, the first thing I'm going to do is lock onto those shares, prevent whoever's doing a dealing in any way, shape or form with those shares, because then it means that I'm going to be controlling the trustee company. Now, obviously, again, if we've got the succession appointors, that's fine. So we can just bin that trustee company, put in a new one. But a more elegant way of doing it, again, with this leading member is we have the leading member and they should be the only shareholder. So if you're upgrading your existing constitution to a leading member special purpose discretionary trust, corporate trustee, then what we do is we clear out all the shareholding so that the leading member appointor of the trust is the only shareholder. Now, what happens is, again, remember that latch on. Now, we've got to prevent that latch on. So you have to think, and it took me a while, is, well, why not cancel the shares? So that...
That's the genius in this, Grant. No one else in Australia is doing this. So everyone listen carefully to this. Massive takeout from today, Grant.
Yeah, so again, if we've got that nice line of succession, then what happens is we've got the leading member. So the only shareholder in that constitution, and it's very easy to upgrade the constitution. So what happens, the only shareholder is the leading member appointor. Now, if that leading member appointor resigns because they're getting attacked or they're in a divorce or whatever, and we'll be talking about this tomorrow, I'm going to be raising a lot of these issues to see how our family insolvency lawyers go. But when we start to look at that, if we resign, we're incapacitated or we die, then those shares, or we're bankrupt or we're going to be in an insolvency position, those shares are automatically cancelled. And then new shares are issued to the next leading member appointor. So, for example, if we went down the track, and remember we had the original one, we had John, Sally, the wife, and then he's got his sister, and then he's got his son. Well, in that instance, imagine if Sally, and this is one of the dangers, I think, and I only saw a case today where an accountant, that old risk versus non-risk, they've put the spouse in effectively as being the non-risk person to hold it. But that's the worst place, because if you have a look at divorces, giving the spouse entitlement claim to all those assets, again, if you think about it, if the spouse walks away, and it doesn't matter whether it's male or female, they walk away, they control the bank accounts, they control all the shares, they control all the assets, the home, etc. That means that if I was a family lawyer on their side, I would be dragging out proceedings for at least 2 to 3 years, making sure you had no money, no assets. It would mean you'd have to spend a fortune to even get there, because, again, that negotiation, if I can make that negotiation as hard as possible, then you're in strife. Whereas this one, it's not, because essentially it just bounces to the next person. So again, we could go straight. If it's Sally, as the appointor, I can get rid of Sally if I want as the next successor appointor, and I can make Max. So then go down to John can make his son, etc. So again, when we go down there.
So just thinking, I've asked you to help me.
Yeah.
I've asked you to help create a special discretionary trust for my largest client and a couple of other large clients as well. And that's what this slide here is talking about, like just moving on from what you just explained about the succession with the leading member. So what is it that you're creating at the moment? Because I love what's in this slide. I think this would be applicable for a lot of clients of a lot of accountants out there.
So here's the fun thing. So at a worst case scenario, you're building these trusts for 80 years. At a best case, they're into perpetuity. So instantly, and if we've got a line of succession, what we've got is we've got succession, asset protection, tax minimization, and now we've got estate planning. So that when we've got the founders, mum and dad, if they've passed away, then we all know with a family trust that those assets then carry on down the trust. So we don't get rid of those assets. But like a testamentary trust, where we might have, for example, instances that we don't want the child to get income or capital until age 25. If they get income and they're a drug addict, we want to minimize that, so on and so forth. What we can do is, for their next generation, build sequestered sub-funds in there, or sub-trusts within that. Alternatively, people can then take that and set up a separate trust if they want, but subject to terms and conditions that your client puts down. So they're embedding in there, if you think about it, it's like a separate set of laws or a separate set of code there that applies for that child. And if that child then becomes a ne'er-do-well, or, moves off the path, or gets, attacked from a legal perspective or from a family law perspective, then we can have a methodology where those assets then fold in to the rest, or they're being held by the trustee in abeyance until something happens there.
That's brilliant, Grant. Now, I've seen Dave's face is blown up. Dave?
Yep.
Just a quick message to everyone out there. We're pushing 500 people on here, and the quality of questions that we're getting is absolutely unbelievable. It's great to see you so engaged to ask questions that are really challenging some of the ideas. What we're going to do is we're summarizing all of these questions. In the next couple of weeks, Grant and Tim are going to answer them in the Deed Awareness Week FAQ, the DORFAC, as I like to call it. The DORFAC is going to come out in a couple of weeks. So please don't be afraid to keep asking your questions. questions. I promise you they're going to get answered. It's a bit hard for us to get them in over the next hour, but keep them coming. Sam Young's asked an unbelievable question about de facto relationships. Eleanor Allen's asking questions about reissue of shares on the death of a leading member. This is, we're so excited that you're resonating with this sort of stuff. We just need a bit of time to get these answers to you, but keep them coming. We are going to get you answers in the DORFAC.
The DORFAC will be an ebook, and it's going to come out to everyone. And we'll do, Grant's doing, we'll talk later about SEPEPA, but we'll do an awesome separate session when we go through the DORFAC. That's really great. Love it, Dave.
The DORFAC.
I love that DORFAC. It sounds good.
Okay.
So what I want to do is
we've got about 5 minutes to go through entitlements, and then we'll head on to trustee distributions, and we'll go from there. But covering a lot. I know we're going super quick. I apologise, everybody.
Okay, so I think it's absolutely crucial. If we have a look at the capital, I don't want to spend a lot of time, but you can see how I've highlighted there that built in the deed, it says the whole or part of the capital or any category thereof shall be held for such one or more of the beneficiaries to the exclusion of the others are then living, so on. So that gives me the ability to create sub-trusts if we see that. So that's where I'm getting that power to then put in schedules for these different sub-trusts. Again, so we're getting that longevity. If we start to move towards that income distribution, you need to show here in that income of the trust fund, which many deeds will have will have this, but they won't have the second bit. So I'm not going to go through, but the trustee shall stand possessed of the income of the trust fund of a financial year, which is available for distribution upon trust to pay, apply, or set aside the same for the benefit of the beneficiaries, etc. Remember, if it's the leading member, then it's obviously the leading member appointor. Then we move from there, and we want to go obviously over to the next slide, which then talks about the ability, and this is the real one that you won't see in deeds that predate 2010. You need to actually start to separately record these different categories of income, which you guys do anyway from accounts perspective. The problem is many of you have been distributing, as David and Tim will show you a little bit later on, but you can't distribute unless your deed actually allows you to separately record these. Because then we go to the next slide, and then that gives me the ability to do a resolution determined by the trustee of which income of the trust fund is distributed or accumulated pursuant to clause 4, which we just saw, which may deal with whole or part of income of a category. So that the same or any part thereof may be specially paid, applied, or set aside, so on and so forth. So, and again, you can see there down in terms of capital with the same element. So
that allows you to split everything out into like interest, business income, capital gains, non-discounted gains, the whole range of things in that one paragraph without getting too specific, which is brilliant.
Remember, we looked at, you can actually do tax offsets, for example, with ESIC. But more importantly, you can also remember last year we had a separate category being the cash flow bonus. So again, when that flows through, so again we can categorize that. But again, what I have to point out is that if your deed is earlier than 2010, you're not going to have the ability to categorize that streaming. But only when Bamford came around. So I just want to have a look at the next slide. There's a lot of information coming through here. The new concept for us is the advisory accountant, or what we call the hybrid accountant. He still does all the accounting, etc., but now is moving up the scale to do a lot more advice. I'm finding when you're dealing with that bloodline stuff, the clients are automatically receptive. There's no pushback. So we need to work out how to do succession, asset protection, estate planning. Now you'll see when we go through this, I've got a course that's coming up in July. It's the first ever. It'll be an accreditation course for you to be an accredited SEPEPA advisor through the Succession, Asset Protection, Estate Planning Advisors Association that we've set up. So that's really important. If you want to go down that track and really get on top and be really super confident and have that accreditation or that certification sitting up there, make sure you come to that course. Now, the final one, which gives a great segue to Melissa, is, again, a lot of this information you'll find is sitting up in our strategy center, all of our webinars. So this is the latest on digital signing and also witnessing. So unfortunately, we've got two columns there. Can a deed be signed electronically? can a deed be witnessed electronically? In terms of anything to do with companies, absolutely. Everything can be done digitally, electronically, because it's covered under, I think, forget what act it is, but it's under the Companies Act. Here we're looking at, state-based jurisdiction. In New South Wales, yes and yes. So if you're doing it a specific way, and you'll see that when you use light year docs, if it's in New South Wales and you're doing e-signing, there's a little option there, and that enables a separate set of wording comes out. And believe it or not, you can do Zoom conferencing or Skype conferencing. So you put down how you're going to do it, so we can actually do witnessing there. Northern Territory, unfortunately. Queensland, yes, and also yes as well. South Australia, no, which is a bit sad. Tassie, no. West Australia, no. But Victoria, yes. Now, what's happening, obviously, as the pandemic goes down further, we're going to start to see more and more states will start to adopt this. Obviously, you can see some of the outliers. Sorry about that. The other guys just haven't got in touch with it yet. But we really need, the Commonwealth Government's done a uniform signing. So when we come around to the trust distribution minutes, again, we've got that ability to make that electronic signing as well.
And can I just say, I used to be on one of the directors of the IPA board. I'm now Queensland president, and we feed back what we hear from accountants, not just IPA members, but all accountants back to the Institute of Public Accountants Board. And this is one big thing that I personally have heard a lot, and I personally have pushed. And I know Andrew Conway and the IPA board are looking at how we can, get the government to understand we need electronic signing for all documents, including banks. These banks are idiots. I'm sorry. All documents, including
I agree
banks,
with Kevin there.
any government department across Australia, electronic signing. So every accountant out there, please talk to your accounting body today. Send them an email right after this session. Say we need electronic signing for all documents, government, banks, trust, whatever. And that needs to be mandatory. We need this as soon as possible. It's just, we're so ridiculous that we haven't got this yet. So please, everyone,
New South Wales is the best because, and we like to use that at Abbott-Family when we're dealing clients and we're doing signing of wills or deeds or whatever. You have a Zoom session, and then if you can actually watch the person sign, and then you can witness the other side, and it's all recorded. Now, that's much better than having a wet signature, because with a wet signature, anyone can say, well, oh, sorry, no, I can't remember doing that, or I didn't do that, or whatever. You can't do that with Zoom. It's like, well, hold on, I can see you doing that there. And I think that's absolutely crucial. It's better for us from a compliance point of view, certainly a PI point of view.
Love it, Grant. So what I'm going to do is just three really quick slides. When we do trust distribution resolutions, we need to look at a couple of things. Is it trust law income, or is it income for tax purposes? So in the deed, number one, you need to look at the clause in the deed, and we'll show you the change GPS distribution resolution in a minute, because you can use either. But in the deed, if it refers to income like a trust law income, it's income of the trust, which is calculated according to the deed and trust law principles. So it's called trust income, distributable income, income of the trust estate. And we could talk about this for a day, but this is 30-second overview, okay? And so ordinary income of trust excludes capital profits and exempt income like cash flow boost and non-deductible expenses. If your trust deed says that the income to push out is net income for tax purposes, that's section 95 income. So it's your ordinary income, taxable capital gains, and franking credits. Now, how do you deal with the difference? If your trust income is more than taxable income, the excess given to beneficiaries should not generally be subject to tax. If it's a unit trust, you've got to think of CGT event E4, which reduces the cost of the cost base of the units. If taxable income is greater than trust law income, there are two approaches to use, the quantum approach or the proportion approach. Now, we're not going into these today, but you just need to be aware of those things. Okay, so what we're going to, cash flow boost, by the way, if you've got cash flow boost, we need to then distribute that out as a separate capital distribution. And we'll talk about that in a moment. Now, I'm going to hand across to Dave, because we've got some big announcements and we want to show some super cool things to everybody online today.
Thanks very much, Tim, and congratulations, Tim and Grant Abbott, on a fantastic session again. One of the comments came up saying, could GPS please stop interrupting Grant? The answer was no, because we do this together because we think that it's the combination of the two of us that make for a really powerful team. And increasing the people who we work with is a priority at Change GPS. Today, we're absolutely thrilled to share an announcement that we are integrating formally with FuseSign, and Mel Voss joins us from FuseSign today. I'm going to share my screen with everyone for a moment, and I want to explain why we're doing this integration. And in this, I'm going to show some of the stuff and the way we do dividend statements and trust distribution resolutions. The reason that we've chosen FuseSign is because the benefit in digital signing, and Mel's going to talk about it in a moment, but really it's ultimate control for you. This stuff has to be signed by 30 June. Now, Tim and I were out last night in front of about 40 accountants in the south of Brisbane, and I asked a question, who actually gets this done by 30 June? And the proud people put their hands up, but a lot of people had this sly, oh yeah, righto. Yeah, we do. But this belief that sometimes it's hard to get done. I'm going to share my screen and show you what this looks like and how it's going to be easy for you. But Mel.
Dave, I'm just going to say before you pass to me, we've taken over some large clients for some chartered and CPA firms in the last couple of weeks. None of them have had trust distribution minutes done before 30th of June. They all had these minutes done when the financials are prepared. That is ridiculous, everybody. If you're doing that, you are so close to using a license. Don't come back and say the ATO says you don't have it signed. How do you prove that they were done before 30th of June without a signature, or in particular an electronic signature with absolute proof? So don't kid yourself. If one of your team members gets called up in front of a judge and has to swear under oath, is it the practice of your accounting business to do these when you do the financial statements 9 months after, and they say yes, you lose your tax agent license.
Or is a better answer to use Mel Voss's tool and show the audit trail of a signature history that you've got. Mel, welcome to the webinar to Deed Awareness Week.
Thank you, and thanks Change GPS for having us and for partnering with us on digital signing. Appreciate it.
We're absolutely thrilled to integrate with FuseSign. You run a pretty decent practice yourself. You've got 15 staff. What was your key takeaway so far today while I get this little demo set up for everyone?
I guess what it reiterated to me that, you know, the world we're living in is very complex, and there are lots of challenges that we're facing as practitioners, and in accounting we don't want to make more work for ourselves. So I guess it showcases to me that there are some things that we can solve simply, and we should be. So, you know, what Dave's about to show is something that can be simplified, which is great. And, you know, and it's also making sure that you do partner with people that do know all the intricacies of what is allowable. And, you know, there's so much hidden in a trustee, and it's really important to get it right. So yeah, that's probably the biggest thing for me. I get to have the view that, you know, use tools to get things done quickly and simply, but also.
Mel, I'm going to ask you a few questions afterwards. But I'm going to show you a few things. GPS members, you'll be familiar with this. The dashboard now has all the recordings of the last 2 days. If you want to share this with your team, you can. I'm going to head over to, I'm going to start with trust distributions. Now, trust distribution app is designed to be easy, to look beautiful, to standardize the way it works in the practice. What I'm going to do is load up one that I did last year, because for a lot of clients, once we get the template in, the distribution strategy doesn't change that much year on year once you sort of work out who the beneficiaries are. Now, what we do in Change GPS, if you've got a connection to Xero Practice Manager, the client details will come through. This is a really
Are you showing your screen? I can't see.
Oh, sorry.
No, I can. Sorry, I'm looking at the wrong one.
Yeah, everyone can see my screen?
Yep.
Excellent.
Beautiful.
This is a really critical section here, what I've highlighted. What you can do is clearly identify the clause in the trust deed that gives you the power to distribute income in the class of income. Now, if you leave it blank because you don't have time to get it in, we have a blanket default that says the trustee has the power under the trust deed. The same thing for determination of income under the trust deed, and then you can choose the choice of calculation for distributable income. Now, this was a massive issue last year when it came to distributing cash flow boost. Net accounting income, net income per the Income Tax Assessment Act, or custom content. If you have a unique deed, maybe some of the older deeds that you can't get updated, you can put in custom content in here to allow you to distribute that out. The allowing of streaming, as Grant mentioned on yesterday, is a relatively new thing. We stream 1, 2, 3, 4, 5, 6 different types of income and then a balance of income as well. Now, I get this a lot when I talk about tax planning. How do you know what you can actually distribute? You don't know what the final profit's going to be. In general, on the distribution minute, we'll have a percentage of the balance. And by doing it as a percentage, as long as the percentages add up to 100, you're generally covered that all the distribution is going to be flowing out of the trust and taxed in a more favourable tax environment. And you can see here, I've complicated this a bit. I've got different amounts going to different people for different types of streaming. This means I'm going to have a complicated minute. Watch how quickly it takes for me to produce this minute. The details are going to come through here from Xero Practice Manager. If you don't have XPM, don't worry. We have about 30% of GPS members don't use XPM. It's still a huge time saver. You can see I just sort of pasted in an email address there. I've got a cover letter that comes in, and this is what the distribution minute looks like. Now, the way it looks and feels is actually important to clients, in my opinion. Sometimes we like to rush this stuff, but a professional look is really important. That's why we put a cover letter on it. The trustee resolution is long here. We've got different types of income that we need resolutions for. Everyone's getting, well, different amounts and different items under the income. That's what it looks like. And then I get to my collate page. Now, this is a full PDF editor. If you want to add documents in, maybe put your invoice in. That might be a good thing to do if you're not on upfront payments. You can do that here. But here's the really cool thing. Digital signature send for signing. Now, right now, you can download this as a PDF and use any digital signature program that you've got to send it out to your client, but you're going to miss out on one of the great features that we've got here, which is the ability to control what you've been send out. I'm going to send that for signing here. I'll put my client's email in. I'm going to put the email address in there. I should have saved that. I'm not going to put a mobile number in now. As part of FuseSign, Mel, you've got mobile numbers that you can put in that send digital codes in. It's unbelievably tight security. I'm going to send that across. I'm going to say for action, urgent. I'm going to send to FuseSign. Now, this can take a couple of seconds to get through, so don't refresh your screen. There's a lot going on in the background. We've got documents being sent to FuseSign. Oh, I've got an error here. I'm 100% sure I know what I did wrong there. Here's the best part about what we've built here. The sent document screen. Now, we all know the benefits of digital signing. Mel's going to talk about it a little bit more. But when it comes to this time of year, there is so much to get sent out to clients, and we do run the risk of documents not getting signed by 30 June. What we can now do within Change GPS, if you connect your FuseSign account, is search by the apps that you've sent the document through. In this case, I'm going to do dividend statements or trust distributions. I can clearly see the send history. Now, Tim or Grant, is that going to stack up in a court of law to prove when documents were signed?
Absolutely.
Yep.
Yeah, absolutely. So it's really crucial, I think, failing to do that, obviously it's going to create big problems, as Tim said, but I'd be pretty comfortable with that one.
Now, practically what this means in your practice, you're going to be sending out hundreds of these. You can clearly see that's my trust distribution one. Here's my dividend statement one. I can clearly see which ones have been cancelled. In yellow, which ones are in draft and which ones are complete. I can search by status. I'm going to search for my sent ones. These are the clients your accountants and success managers need to follow up, and only these ones. Everyone else has signed it. So this is a huge tool, and this is why we've decided to partner with FuseSign. Mel and her dev team, Scott, have been fantastic to work with.
Awesome.
This.
Awesome.
I showed this to our success manager, Gemma, who's, hey, Gemma, you back there?
Hey, Gemma, give us a wave.
Give us a wave, you're back there. Well, Emily's there. I think our success managers are right down the back there.
Invite them down so they can tell us what they think, Dave. Yeah, go on.
Gem's having lunch now, Tim. She goes on lunch when we start talking on webinars.
Oh, good. Good.
So we're absolutely thrilled by this. I think this is going to be a huge time saver. Now, again, you can connect with any digital signing that you want. We've partnered with FuseSign because of the benefits of this feature. Now, when you sign up, we have a huge offer. Mel, do you want to share what the offer is for anyone who's doing this?
Yes, I guess for people that are new to FuseSign, download a free trial. You get it for the next 14 days free. Hook it up to your Change platform and start sending documents. We also are giving all Change GPS clients the first 2 months free. So it's a bit of a no-brainer. Being an accountant myself, we've built the platform for accountants. And the whole premise of the whole way we've built our signing platform is to make it simple for the accounting practice to send any document out of their practice for their clients to sign in the same way. So whether you're sending financials and tax returns or, engagement letters or any, BASs or anything coming from Change GPS, what the client will see is the same experience. So that is the ultimate gold in terms of the way we've done it. And yeah, we're giving a really great for you to give it a go.
Why are accountants so unique that we need a particular type of digital signing that's custom to us and not the generic signing platforms? And it's almost a commoditized product now. Why do we need something so specific?
Yeah, look, there is a bit of a, I guess, a commodity in some transactional signing platforms available. The way we've built it, and coming from a process-driven practice, me managing accounting practice for about 20 years, there are some clear things that stand us apart from the rest. The biggest thing is managing a family group of documents, lots of recipients, and lots of different documents, and we've created the ability to send as many documents in a bundle and give people different rules around signing, viewing, or not even having access to a document. So really simple signing, really easy to manage. All of your users in your practice have access to the platform. So there's no sort of setup costs or user costs. Really, it's just about what are you sending out. And we've made it quite unique. Yeah.
One of the questions that I've been asked is the price of FuseSign. And I commented before that this is almost a commoditized product. There are so many competitors out there, and I think you're very reasonably priced.
Yeah, look, we are. We say it's about the cost of a postage stamp, which it is. And I was talking to a practice this morning. It's not just the price of the transaction, because there is lots. I mean, and Grant alluded to this as well before. There is lots of complexity in the world of digital signing, and we built our platform with two-factor authentication, so SMS verification. It has to be locked as a certified PDF once the signing transaction's happened. It tracks the IP address and the audit trail. So there's a lot involved in that cost of a stamp. But it's also, I guess, the process around the time saving of sending stuff out in the mail, documenting what's out, what's come back, getting it to the post, printing it, having a printer. Like, there's all of these flow and effects. So I can talk all day about the savings you'll get, but it's really about the process improvement that I think, and the ultimate in-client experience.
Can I just jump in there? One of the things I love about what you're doing is you've come from a very practical place as an accountant in the accounting business. And I'm like you, we've created Change GPS out of frustration. There are a lot of people that might go out there and say, try this and try this, but they're not like you and me, Mel. Like, we and our team know what we want. And that's what we've both created. And that's why we partnered together, because we love what each other does. The other thing I'm going to say is there's a little bit of furphies out there in this document signing space. A lot of people say, look, it's only X amount per signature. That's great, but you've got to pay $16,000 up front to get that cheap rate. So make certain that you actually, if you're considering stuff, don't get sucked in by the slick sales job. Have a look as to what the real price is for a business of your size. And I know you're partnering with BGL. We love BGL. That's another reason that we want to have one thing that's all working together. Fuse, BGL, Change GPS, we're all working so close together. And if everyone likes what we're doing, join us.
Yeah, I agree, Tim. That's, I guess, a good segue. The team at BGL want their clients, because they're getting lots of feedback around the price of digital signing. So having an inbuilt digital signing platform that's more cost effective, but it's also the client experience is going to be the same for any corporate compliance documents or super fund documents.
Yeah, so love it.
That's what I like. And yeah, you're right. There's a lot of hidden costs out there. I'm very particular about how I do business and how I would want people to do business with me. So there is no hidden surprises.
So pricing will come out to everyone in emails. We'll give you all information that you want to know. And look, I think we're at the hour mark. Dave, is anything final? And
look, very quickly, I've put a post in the chat group of how you can head to the FuseSign website, where it's got all the details of the Change GPS bonus that you get for today. If you want to be contacted, we've done this every day, by Change GPS because you're interested in the way we do trust distribution and dividend statements, click yes. Lightyear Docs because you think that Grant's bang on the money and he's saying everything you've been thinking for a long time, or FuseSign because it's literally built for accountants. You've got a huge promo from Darren Jennings in the chat. It's great for broader accounting practice, electronic signing. Highly recommended. Click
Thank you,
on
Darren.
FuseSign and the teams will be out. But really click on the link there, FuseSign.com/change GPS. Get all the details you need about this new integration. Strategically, we'll be rolling the change, the FuseSign features out across most of the apps that produce documents in Change GPS. Again, giving you that control screen so that your team can see who they need to follow up. I think that's the feature, the killer that got me excited about partnering with Mel and the team. And we're pretty keen, I know our devs are pretty keen to get it rolled out.
Hey, Mel, thank you very much for doing this with us. And look, we will be talking and getting you on web events with us over the coming months. Grant, thank you so much for being with us today. Now, everyone, tomorrow will possibly be my favourite part of the week. Tell all your friends, don't miss it. We're going to be showing you some epic attack and defence moves. Grant and I, and a good friend who's a family lawyer, a good friend who's an insolvency lawyer, the best of the best in Brisbane and probably around Australia. You're going to get the best out of this tomorrow.
Sorry, guys, I need to share a text message that I just got from somebody who's on the call. I don't know if I can show the screen because a few profanities on it. Fuse is a exclamation hashtag, full stop, load easier than Adobe and DocuSign. BGL and XPin integration coming is very exciting. And now with the Change GPS integration, we're looking at a tool for the whole practice. And GPS is absolutely, I am so proud to be able to help people like this.
So 100% Fuse for everything we're doing. But look, Grant, we'll get our boxing gloves on for tomorrow. You and I have got a little bit of prep work to do, 100 push-ups each. We'll get ready.
Am I going to get a microphone that comes down from the ceiling and do a big ladies and gentlemen?
Yeah, wait until I start playing around with their heads with self-managed super funds. I'll blow their brains out.
Okay.
You'll actually see,
Around.
when I ask them what happens, you'll see their brains leaking out of their ears.
Awesome. So everyone, please type in the chat. Did you love today? Are you loving the week? You're going to love Fuse. Jump on tomorrow. We want to get, as many as on as possible to enjoy it. And then Friday's going to be how we wrap it up and how we do it all. David Boyer, you need a let's get ready to rumble tomorrow, okay?
100%.
Definitely be a lot of fun.
Thanks, everyone. See you all tomorrow.
Okay, thanks,
Thanks,
guys.
Thanks, guys.
Bye.